Welcome everyone to our weekly crypto journey session. Thank you so much for tuning in. We are hosting this talk every Thursday during your lunch hour, so you can join our crypto talk while you're having your lunch break. First, let me introduce myself to some of the new faces here. I'm Merlinda. I'm one of the awesome team members here at Dasset. Each week, we will be doing a presentation of our chosen topic, followed by a hands-on demo so you can get better navigate the world of crypto. Before I introduce our speaker, I wanted to let you know if you miss any part of this crypto talk or would like to hear the session again, there will be a recorded version of this talk available by request. Also, would love to hear from you. Feel free to post a question or even an opinion by clicking the Q&A box just down below, or even clicking the chat as well to say hi. For today's session, we have our very own Dasset CEO, Stephen McCaskill. And without giving too much away for today's topic, we'll be diving a bit deeper about different type of orders you can make in Dasset. Now let me hand this over to you, Stephen.
Thanks so much, Melinda, and thank you everyone for being here today. And I wanted to go over different order types and definitions when placing trades or orders. And I guess we are working with orders and different order types on a daily basis. And so what we want to do is break down a little bit more about what we do and what we have to offer to our customers, because we don't realize it, but it can get very complex very quickly. And so what we'd like to do is break that down to show you how to make the most out of your orders on Dasset. Dasset is New Zealand's trading platform for cryptocurrencies and digital tokens. We have over 80 digital tokens on our platform, and we're always adding more. Looking at our platform, we can tell that people like to do the same thing. We like to follow others. And the reason why we can tell is because everyone goes and selects the buy order at the same time, or the sell order. And we can see that where there are periods of time when markets are very slow, there's not a lot of trading activity, and then there are periods of time where everyone is hitting that buy button at the same time. And so when we look at trading strategies, we realize that there are many different types of trading strategies, and you have to really consider, are you a trader or an investor? Unfortunately, the Dasset platform facilitates multiple types of strategies and personas. And so if you are interested in being a long-term investor, you buy digital assets, you hold it for 1 year, 3 years, 10 years, and at that point in time, you can sell. We also facilitate people who want to trade very quickly. They might be considered day traders, where they might be placing an order and within a few hours getting out of that position or out of that order. And so it's really important to understand the different order types that sit on Dasset, because they can help you with your strategy overall. Now, a really key aspect that I think people miss when they look at trading is where the value comes in. And so a lot of people focus on their wins. They focus on the gains that they get from a trade, and that is where they focus their attention. Really, trading isn't just about maximizing your gains. What the most important aspect of a trader or trading side is how to minimize your losses. It's really easy to make money in a bull market. And I shouldn't say that easy, because not everyone can make money. But it's when there's a bull market in the stock market, in the commodities market, in crypto. It's relatively easier to make a trade and profit. And so, when we looked at the late 90s, everyone was a day trader. There were, you can look at all these news anchors, and they're interviewing everyone from 20 years old to 90 years old, and everyone is day trading. The reason why is they can close their eyes, pick a stock, wait a few days, and the stock will go up and they sell. And so, is that really trading? No, I would say not. And you can look at that because after the dot-com bubble, there were no more day traders. They were all gone. And the reason why was because they lost all their money. And so if you're looking at trading, the most important aspect is how to minimize your losses, how to reduce or prevent your losses. And so, there's I don't know if it's a joke, but they say, a lot of people on Wall Street are sociopaths. And I think part of that is that there is some merit to that. And the reason why is because you have to take the emotion out of trading. And the big reason is feeling that loss. If you are losing money on a trade, then you are more likely to hope or wish that it goes up, as opposed to cutting your losses. So that's really the most important, I think, one of the most important lessons that somebody should learn as a trader if they want to go into trading. And that is understanding how to minimize their losses. Because if you don't minimize your losses, you will never succeed as a trader. And so that's what we're going to go into today is how to place advanced order types, which can help you with your trading strategies. And to get there, there is some terminology we need to know. This is, there's a lot more terminology out there, so I'm just keeping it simple. But some of the most important things you need to understand are an order book. So on a decentralized exchange, there isn't really an order book, but on a centralized exchange, it's managed by the exchange. It's essentially an electronic system that has all the bids and asks. And it didn't always used to be electronic, in some places today. And if you look hundreds or thousands of years ago, you could find order books that were in paper or on stone. And so today, they are a list of all the buys and sells that people have entered into the book. And that creates the market depth. And that really determines how much liquidity is in that market. And so there could be an order book with only 3 orders that are submitted. And so with only 3 orders, there's not a lot of liquidity in that order book. Or you might have an order book with tens of thousands of orders. And that means that there's likely a lot more liquidity. There's a lot more market depth. And so it's when you place an order, there's a lot less impact to the price or the change in the market conditions. And so it's also important to realize the difference between a market maker and a market taker. And part of it is fees. So many different exchanges, including Dasset, have different fees depending on if you are a market maker or a market taker. Now, if you're a market maker, that means you're adding liquidity to the order book. That means you're submitting an order with crypto or digital tokens to the order book. You're adding liquidity, you're making the order book deeper. And so usually there's an incentive with a slightly lower fee for market makers because a lot of these exchanges are trying to attract more liquidity to their ecosystem. Now, a market taker is somebody who takes or removes liquidity from that order book. And they're usually making the order book less deep, and they're taking that liquidity away from that market. And so terminology continued, we have an order and a trade, and is a difference. An order can be submitted and it can be canceled without there ever being an execution or the completion or fulfillment of that order. And a trade is an order that is filled or executed. Now, you can have an order that has many trades against it. So, for example, I can put an order in the order book to purchase 100 Bitcoin. And now you, as a seller, may only have 1 Bitcoin. And so if you sell that Bitcoin to me, then that trade of 1 Bitcoin has partially filled my order, but I still have 99 Bitcoin that I want to buy. And so, might require 99 other people with 1 Bitcoin each to make 99 trades to complete my order. But an order can be partially filled, can be completely filled, or it can be canceled and unfilled, where a trade is an order that has been filled, it's been executed. And so if you look at our system, you can see trades that execute against open orders. We are taking that data into our system now. So in the future, you will be able to get the trade history as well as the order history for any transactions that you make on Dasset. Some other important terminology is a base currency and quote currency. Of course, that's taken from legacy markets. It's not necessarily a currency per se. That's usually when you're looking at foreign currency exchange. And so I'm not saying that Bitcoin's a currency, but maybe we can say it's the base asset. And so that is the asset which is being traded. And so in a Bitcoin New Zealand dollar market, the base currency is Bitcoin. The quote currency is the currency that the asset is being quoted in. So that's usually the price. Now, this makes a lot of sense when we're dealing with markets that are denominated in dollars. It's quite easy to realize that on the Ethereum New Zealand dollar market, the quote currency is New Zealand dollars and the base currency is Ethereum. But when we start looking at other markets, like the Ethereum Bitcoin market, then it becomes important which one's the quote currency and which one's the base currency. And it's really varies from exchange to exchange. So some exchanges may have the quote currency in Bitcoin. So you're buying and selling Ethereum and priced in Bitcoin. And other exchanges, you might have it reversed. It's not really the case for Ethereum Bitcoin, but you will see that for sometimes things like Tether. I've seen some markets where Tether is priced in Bitcoin rather than Bitcoin being priced in Tether. And so we'll go a little bit more into that. So going into actual order types. So this one, market order, ceiling market order, they are the most basic. They are the easiest to wrap your head around, and they are an order that gets submitted to the market and is immediately processed at the market price. So when you submit the order, you don't have any control over the price. It's whatever that price is. And because there's so many traders and so many market participants happening on our markets at any given time, between you placing the order um, and the order submitting, that millisecond, that fraction of a second between placing the order and the order submitting, it might change. It's not really going to change a lot. For something like Bitcoin, it might change a fraction of a cent. But if you're buying Bitcoin at $90,000 and 1 cent, and you place a market order, then by the time it gets to the order book, you might be buying it at $90,000 and half a cent, if that makes sense. And so the difference between a market order and a ceiling order is the the value that you're inputting. And so when you're submitting a market order, you're submitting the quantity of the base currency. So you're submitting the quantity of the asset that you want to buy. So I don't know what the price of Bitcoin is, but I want to buy 25 Bitcoin or 0.25 Bitcoin. And so I submit an order to the order book for 25 Bitcoin, and it buys at whatever the price is, and I'm guaranteed to get 25 Bitcoin as long as I have enough dollars in my account to buy it. A ceiling order is slightly different, where you want to buy a specific quote currency amount. So basically the total value of the order. I want to spend $3,000 worth of Bitcoin. I don't know what the price of Bitcoin is, but I'm willing to buy $3,000 at the current market price. And so I don't know what the quantity will be, but I know I'm spending a cap of 2,000 or 3,000 or whatever I set. So those are pretty easy. Limit orders, so we're starting to get into conditional orders. And this is where you as a user gets to set the price and the quantity. So you have a little bit more control over the order, a little bit more flexibility over the order, and that gives you the ability to dictate a little bit more about your control over that order. Now, the order could be something I didn't talk about, market orders, but you're always a market taker. So you're always taking liquidity from the order book. Whereas a limit order, you could be adding liquidity or you could be taking it. And it really depends. So for example, if Bitcoin is $90,000 right now, and you want to buy it at $50,000. So you want to buy 10 Bitcoin at $50,000. Then what you are doing is adding liquidity to the order book, because the price is currently $90,000. You have to wait for people to sell it to you. So you have to wait for the person buying at 89,000 to get their Bitcoin, and 88,000, and all the way down until somebody is willing to sell you those 10 Bitcoin at $50,000. And so in that case, you are a market maker, you're adding liquidity to the market. Now, if Bitcoin is $90,000 and you place a limit order for $90,000, then the order will, in addition to getting added to the order book, actually execute against somebody else's order. So you're still taking liquidity away from the order book, and so you are taking liquidity out. So fortunately, you still have control over quantity and price, so you can set whatever quantity and price. But the downside, and it's not necessarily a downside, it really depends on your position, but the downside is that you have to wait for somebody to come along and sell it to you at the price you want or buy. And so, if you set Bitcoin at $50,000, you set a buy for $50,000, that order may never fill, or it might fill tomorrow. It really depends on the direction of the market. So now we're going to go into time frames that relate to market orders and limit orders. And so these time frames, and time frame isn't really the best terminology, but this is additional conditions that you can place around your order. So if you place a limit order that is good till canceled, it's just like it sounds. That order is there until you or the exchange cancels the order. And so you could place an order and come back in 2 weeks and the order is still there. It's not going to go anywhere. On the other hand, you can place an immediate or cancel or a fill or kill. And there is a slight difference between the two. A fill or kill is an order that must complete in its entirety or get canceled. So if you want to buy 100 Bitcoin at a price of $90,000 and there's somebody who is selling 10 Bitcoin at $90,000, you submit your order. It's not going to fill the entire order. So you're only going to fill 10% of your order. And so rather than filling that, it will just cancel the entire order. And so you essentially get no order execution and the order never gets submitted. Where immediate or cancel means the order gets submitted and it gets filled at the current conditions, and whatever is not filled is canceled. So if you place that 100 Bitcoin buy order and somebody's selling 10 Bitcoin for $90,000, then you will get 10 Bitcoin and the rest of your order will be canceled. But if you have a good till canceled, you put in an order for 100 Bitcoin, that order will remain in place until you cancel it or until it's completely filled. So lastly is a stop order. And stop order is a conditional order that doesn't that adds the order to the order book when the conditions are met. And so if you do not, so if the conditions are not met, your order is not in the order book. And there's some benefits to that because that means that your liquidity is, your assets are not tied up in the order book. So you're not providing liquidity to the order book yet. But once the condition is met, then you can either place a market or a limit order, and that will either, so this is where it gets a little bit complicated. It could either be a market maker or a market taker. So if you place a stop market order, then it will be a market maker. If you put a stop limit order, then it could be either a market maker or a market taker. So not only do you have control over quantity and price, you have control over a few more conditions, and those conditions are specifically how much, so there are different ways of doing it, but specifically to Dasset, it's based on a certain price. So if the price of an asset goes above or below a certain price, then the condition will be triggered and a limit order will be placed. We only have stop limit orders on Dasset. We do not have stop market orders at the moment. And now what I want to do is actually go into a demo and show you how they work. Before I do that, are there any questions? And I think there will also be a lot more insights when we go into the actual demo.
I do have a couple questions. Why are market makers and market taker fees differ?
Yep. So so if you look at most exchanges, they will have a different market maker fee and a different market taker fee. And usually the market taker fee is higher than the market maker fee. And the reason why is because exchanges and liquidity pools are trying to attract liquidity. And so they attract liquidity to the order book by incentivizing the market makers with fee discounts. And so by adding liquidity to the order book, you're incentivized with lower fees. And so you're providing a service in essence to the exchange. So when you're providing liquidity, you're actually helping the exchange by adding more liquidity. And so in return for the service, you get a discount, a fee discount, where when you're taking liquidity away from the order book, you're essentially reducing the pool that people can trade against. And so, so that's why there's usually a higher fee. And then there's also volume discounts. So usually the more you trade, the higher the volume discount is. And so, so let me share Dasset's screen.
And just to reemphasize to the attendees, all of the order types and the conditional types that you've gone through or have is about to demo, they're all available in Dasset, right? Dasset Exchange?
For the most part. So there are a couple that are not there, and there are a couple that are available through our wholesale desk. And I'll go into them as soon as I can log into my account. Okay. And your view might be slightly different just because we have some special features on here that we're testing, and so not available to everyone. But so when we go here, what we can see, so this is our instant buy, instant sell. And so you can only place a market or a ceiling order. So if I want to buy $50 worth of Bitcoin, then I'm placing just a regular market order where I don't know what the price is, but I'm going to hit, I'm guaranteed to get $50 at the current market. But as you can see, the price changes every second. And so by the time between me submitting the order and the order hitting the order book, the price might have changed by a fraction of a cent. So on the flip side, let's see here, we'll make it a little bit easier. Let's add some XRP. So this is a ceiling order. A ceiling order is, I don't know what the price of one XRP will be, but I want to guarantee $25 worth, or not $25, 25 XRP. So it doesn't matter what the price is, as long as I have enough available in my balance, I will be guaranteed 25 XRP. You can also see the fee down here. Okay, so that's really basic, but we're not here to do basic orders. So we're going to take it to the advanced orders. So maybe I will change to, go to Cardano. Okay, so we'll go to market order. And so then we don't do ceiling orders on the exchange page. It is something that we are considering to do, but at the moment, you can only buy a specific quantity. So basically a quote, basically the base currency. You can choose what the base currency is, or the quantity of the base currency you want to buy. For this market, Cardano, NZD, the quote currency is New Zealand dollars. So when you look at the order book, you can see here are people selling on the right and people buying on the left. So this is all buying. And this is the order book depth. So we've kind of, so you can see what we've done is aggregated the quantity and prices that people buy at each level. And so you can see this green, I think it's green or red. And so you can see, you know, at this price, at what people selling $3.05 and a bit, there's quite a large amount of ADA that people are selling. So, you know, 100,000 ADA at this price. So you can see if you want to buy $100,000 worth of ADA from a market order, it's pretty solid at, you know, around this price. If you want to sell 100,000, you know, you can see that it's pretty solid here. So there would be slight slippage of, I don't know, maybe about 1%, something like that. And so, so you can see order book depth. You can see the prices people are selling at. So these are people who've added liquidity to the order book. You can see prices that people are buying at. You can see these are people that have added New Zealand dollars to the order book wanting to buy. And so we have time and force, fill or kill, or immediate or cancel. Now it's a bit difficult to demo these, especially with only $100 in my count, but or at least for market orders, they're a bit difficult to demo. So if I wanted to place an order for 100,000, Cardano, and there isn't $100,000 in the order book, or the market movement, the slippage is more than 20%. So let's say I want to buy 100,000 units, which is about 300,000 New Zealand dollars. So there's definitely this amount in the order book. So this would fill. But let's say I wanted to buy $10 million of Cardano. See, it doesn't even show a total because it would buy up most of the known order book. And so this order would never submit. I mean, it would submit, but it would never fulfill. So the whole order would be canceled. Now, if I were to do an order for 10 million Cardano, immediate or cancel, then it would essentially buy up $10 million worth of Cardano. You might be buying that last unit at an absurd price, you know, $3, $4, $5, $10, and then whatever is remaining, the order would cancel. So this order would still fulfill, whereas this order would not. And it makes a little bit more sense when we look at limit orders. So right now, you know, this is pretty easy. I'm just going to place an instant market buy. This shows the confirmation. So between me submitting place order and confirming, you know, the price could change all over the place. So now the order is submitted. It's buying it at the best market price. You might see it down here, but usually it'll just go right to your order history. So there it is. You can see the details. So relatively simple, just like the retail. So does anyone have questions? If not, I'll go to the limit order.
None so far, but there is a question. If a trader or a customer make a mistake with one of these limit orders with the way they put the price, will that be a big issue? Will they be able to cancel it, or will it execute?
Great question. And, you know, that's something that is a big problem when doing manual trades. And sometimes you call it fat fingering, where you accidentally hit one when you meant to hit, you know, 0.1
Mhm.
or you place an order that's an order of magnitude larger or smaller. And it really depends on the situation. And so, if I want to buy, let's go to Bitcoin for for that
Because
example.
I assume it does tend to happen, right? Like a lot of our customers do trade on the go on their phone, and they do tend to fat finger as well.
Yeah. So if I, want to buy 5 Bitcoin at $90,000 and I accidentally hit 90, then, oh, let me just do one. I do one at $90. The order is going to submit. And so there's no fee that charges, but now I have an order in the order book, good till canceled. And so that's going to be there. I can cancel at any time. I made a mistake and I'm okay. There's no problems. Now let's say I want to order 1 Bitcoin and I accidentally enter it in for $900,000. So bad news bears, and that is if you are placing an order um, that can fill, then it will fill at the best market price.
Mhm.
And so let's see if we can make this happen. 0.6. Okay. So now I am trying to buy a Bitcoin. Let's pretend I'm buying 10 Bitcoin and I accidentally hit a price of $900,000. Now, I'm not going to buy it for $900,000, but I am going to buy it for $91,496. So when I wonder if I can make it even smaller. Okay. Let me just, okay, so gonna buy, accidentally put in a price of $900,000, which I do not mean to do, but maybe one day you will be placing that order. And so we're not going to do that right now, but I just submitted an order. Order was submitted and the order was immediately executed. So you're not going to see it here. So if you go here, what you'll see is that order completed at the current, so it's basically placing a market order. Well, it's a limit order, but it's basically executed as you submitted it. So this is where this confirmation comes in handy. We added it a couple months ago, but allows you to confirm your order before hitting it. So it's an extra oopsies check. And then, if you want to be a daredevil, you don't want to check your order, then you can remove that. But then, you might be placing it really high. Now, let's assume that you have, say, $1 million in your account and you buy 1 Bitcoin. Well, then you're just going to buy up the order book. So you'll buy 1 Bitcoin up to whatever one whole Bitcoin is. So you probably buy it no more than this price. But let's say that you have $100 million in your account and you want to buy 100 Bitcoin, you accidentally enter $90,000. Now, this order will partially fill, but it will not complete. So only fill about up until maybe 15% of the order price movement. And so it's called a collar. And so a collar is there to prevent you from essentially buying Bitcoin at $900,000. If you have those funds in your account, it will essentially stop the order when the price moves by 20%. And so if you do this, you might the order book's too liquid for you to really move the Bitcoin price by 20%. But if you are maybe placing an order for 10, $20 million, then it's possible for that split instant it moves by 10 to 20%. So then you would be paying that premium. But if you are doing, so if you are doing a fill or kill, then the order would not fill. It would completely cancel. And so that's where something like this comes in handy. And I just want to move to a market that has just easier denominations to wrap your head around. And so, so what I'm going to do is I'm going to set a price of 3.03, and I want to buy, that's a bit tricky because my balances are a bit spread out across a number of accounts. But let's say, let's see if I can do this. I'm going to try and snipe and place an order between these two without it executing for 20. And in theory, this order should just cancel. So this order gets submitted. Oops, I think there was a message to say this order was canceled. And yeah, so you can see the order was canceled because it was below the ask price. And so, so it was never completed. And so it won't fill. So if I do, if I do it at $2.50, it'll cancel. So this order never fills. Fill or kill not met, so the order is canceled. Now, if I do it at 3.05, then it will fill, in theory. So in theory, the entire order will fill.
There you go.
Now, if I were to set it at, so it's a bit difficult doing it like this, but you see that the best ask price is, or was this price. And let's say if I do this quantity, then, and just pretend I'm doing it here, then, oh, that's interesting. So, so if I do this, this should fill. And so the order should complete. But if I do change it to 2,000, then the order would cancel because there isn't 2,000 Cardano at that price. And so it does make a big difference based on fill or kill. Now, immediate or cancel, it's a bit tricky to show you an example with my current balance, but let's say I place an order for 1,000 Cardano at this price, then 228 would fill and the rest would cancel. And so it'd be a partial fill. And then if it's good till canceled, the order will be in place until I come along and cancel it, or the market goes under maintenance and we have to cancel it, or something along those lines. So now let's go to even more advanced orders, and that is stop orders. So this is where people are able to take the emotion out of trading because they've already determined what they want to do before the trade. They know their entry and exit points, and they've removed the emotion. So if the price of, so if you're holding an asset and the price of the asset has dropped and you're losing money on that trade, the order executes based on the strategy you've already set, and you don't have to have that emotional gut-wrenching feeling that I've seen people have, and isn't great for people who think they're traders. If you're getting that kind of gut-wrenching feeling, then probably not trading correctly, if that makes sense. And so stop order is the ability for you to place orders based on certain conditions where you're not adding liquidity to the order book until those conditions are met. And so let's say, Bitcoin, it's sitting around, what is it sitting around? 65,000 US dollars. And you go to bed, say you bought Bitcoin at $65,000, you are going out, you're going to bed, you're going to do anything else in life. And so you want to make sure that you are in a good position where if the price goes up, you can sell and make some money on your trade. And if the price goes down, then you can sell and cut your losses. And so, and you can have it both ways. You can have a condition where the price goes down and you place an order, a buy order, or the price goes down and you place a sell order. So it usually, they call it stop loss or stop orders because you are preventing or stopping you from losing money with an order going down, with the price of an asset going down. But there are many different strategies that you can use around this. So what I'm just going to do is a strategy for cutting your losses or taking profit. And so let's pretend I bought Bitcoin at $65,000 and I want to sell my Bitcoin if Bitcoin drops below $64,000. So if Bitcoin, let's change it. So if Bitcoin drops to $64,500, then what I want to do is enter an order in the order book at maybe 64,250. So, we don't really know how the market's going to move. The price might hit 64,500 and it could continue going. Or it might stop there. I don't know. And so if I'm worried that it's going to continue going, maybe the market just starts tanking. And so what I can do is set a limit order that's lower, so I'm kind of guaranteed or have a little bit more certainty that the order will actually submit. Now I can even do a fill or kill. So I can add multiple stop orders that are triggered, and the order might fill in one of them or might fill in another, depending on these conditions. And so I'm going to make it kind of easy. So if I have this Bitcoin in my account, and I'm worried that it's going to go down. So if it goes down, I want to cut my losses. I just want to make sure, maybe not cut my losses, but hedge my profits, essentially maintain the profits that I made. Say I bought Bitcoin at $60,000 and I just don't want it to go below that. And now it's at 65. So I want to lock in my profits. And so if Bitcoin goes below the stop price of 64,500, I'm going to submit a limit order at 64,250. If the price is above that, then it's going to execute immediately. If it's below that, then the order may go into the order book, but not fill. So that's why I'm doing it slightly below what the stop price is. So I'm going to hit a place sell order. And basically, what you'll notice is that my funds don't leave my account. They're not held in the order book. So I haven't added any funds to the order book yet. I've placed a conditional order and the conditions have not been met yet. And so my funds haven't been added to the order book. And so you'll see that they're still here. And so what I could potentially do is, I'm actually going to cancel this order. Let's do a fill or kill and submit this. And I'm worried that if the price is just dropping like a rock, then what I'll do is place another fill or kill order. And if the price is moving even faster than what I think, then maybe I'll just do a third one just to make sure. And so now, if the Bitcoin price drops below 64,500, and actually I might tweak it a little bit more. So let's see here. So we'll make it a little bit more complicated. So initially, if it drops below 64,500, it will submit a fill or kill order at 64,250. But if that doesn't go through, maybe it's dropped already, below that, then what I'll do is put in another order at 64. So because I want to guarantee that my sell order goes through. And then maybe I'm worried that the price is just tanking, which, I hope it doesn't happen. But, worst case, this will submit a limit order at 62,500. So if the price hits 64,000, then let's go down here. So if the order hits 64,500, I'll submit a fill or kill order at 64,250. But if the price has already dropped below that, then the order won't fill. So that's why I'm doing the fill or kill. And so if it drops below 64, then it'll place, if it drops below 64,200, it'll place the order at 64. And if it's really dropping like a rocket, price drops below 64, then I'll set the price at 62,500. So I'm almost guaranteed that worst case scenario, I'll sell at 62,500. Best case scenario, I'll sell at 64,250. So this is a way to stop my losses, or even hedge my gains. So I'm guaranteed, if I'm already up, I'm guaranteed to sell at this price if it drops that amount. But maybe I want to buy, and so but I don't want to tie up my liquidity. So if the price starts tanking, if Bitcoin price drops to 60,000, then it's dropping really fast. And maybe what I'll do is put in a buy order at 58,000. So I'm just going to lower the quantity. So if Bitcoin starts dropping like a rocket, it passes 60,000, then maybe I can put in some limit orders. So I still have my money. So you can see I still have the funds available to use. I can spend them on anything else. And then the order will trigger if these conditions are met. And once Bitcoin hits $60,000, it will add $29 to the order book, which will make it unavailable for me to use. And so I can place, a million of these if I want, if I think Bitcoin's going to drop it to $50,000, then I, want to put it in at 48, something like that. And so it allows me to put some certain conditions in place to buy if the price goes to a certain level. And then, of course, on the other side, if I want to sell, if the price meets a certain criteria. So if Bitcoin hits $80,000, then maybe what I want to do is that's nearing the price that I want to So if the price goes to $80,000, then maybe I want to sell at 82,000 because I think it might still go up a little bit more. So I place the sell order. And so now what I've done is I've created a band where if the price drops below a certain price, it'll sell. So it hedges my losses. If it goes up to a certain price, it sells so I can lock in my profits. And so I now have the ability to reduce my risks and maximize my gains, where I don't have to watch the market like a hawk to place that order. It can place the order while you sleep, and helps you take away the emotions and become a better trader. So stop orders can be a lot more advanced. You can place market stop orders where it just executes at market price. That is something that we will be adding in the next few months. And there is also the ability to place orders based on changes. So we don't have that functionality at the moment, but basically you can say if the price moves by 10%, well, I can't even put a percentage sign, but if the price moves by $50, then submit the order. If the price moves up by 10%, then submit the order. The price drops by 10%, submit the order. And so those are orders that we're working on to make a little bit more advanced for our customers. And those will be a little bit longer away, but we are working on them. So let's open it up to questions.
Yes, thank you for that. Some trades can be partially filled, as you mentioned. What does this mean, or like, will it be filled over time?
Yep. So an order, so I could put in an order for 100 Bitcoin at say this price,
Mhm.
and it would buy this amount of Bitcoin. So if I put in an order for 100 Bitcoin, then it would partially fill, where I'd have about 98.7 Bitcoin left in that order. Now, that order will remain partially filled until people sell me their Bitcoin. And so it could remain partially filled forever. Like if you cancel the order, then the order will never fully complete. So it can go either or.
Mhm. One of the attendees mentioned that when you were doing sell, the button that says the stop button wasn't reflected on their end. Is this available in Dasset already, or is this still a sneak peek?
Nope. So it is available. However, it's only available for crypto to crypto orders at the moment.
Mm.
So anything against Tether or USDC or Bitcoin or ETH. And so at the moment, you can lock it in against a basically or Euro. Let me just confirm, but it is not available for New Zealand dollars yet. It is something that we are working on, but you can do it for any crypto to crypto order. The benefit is the fee is 0.05% compared to 0.3%. So the fee is substantially less when you do this order, and it is available to all customers. It's not available for New Zealand dollars yet.
Well, thanks. If you are following the market up and you keep moving your stop up behind, what percentage drop would you recommend to trigger?
Ooh, I
Not
can't
a financial
advise that.
advice, sorry, not a financial advice.
Yeah, I can't advise that. I mean, it really depends on the market. You know, even within crypto, the markets are very different. You know, XRP will have a much wider band in in which it's daily volatility. You know, you can't quote me on this, but volatility for some assets might be 10 to 20% in a day. XRP, let's see, if we look at XRP, might be $1.10, and this morning it could be $1, and tonight it could be $1.20, and so that's basically a 20% movement. And so you might want to make it a much higher margin in terms of that percentage, whereas Bitcoin might only move 1 to 3% in a day, but we've seen it move back in 2012 it was moving 100% a day. So it's I don't think it's going to move that much. It could potentially move by 50, drop by 50%, but I don't know. We're not going to see Bitcoin doubling overnight. Maybe we might. Don't hold my word to it. But I guess you can look at averages, and it's the same with FX. New Zealand dollars and US dollars usually varies less than 1% a day, less than a fraction of a percent. But then there are some days where it might move 1%, or even crazier, 3%. So it really depends on the market and the conditions.
We know crypto never sleeps, but do we have any advantages with New Zealand time zone against the general crypto market?
I think we do. The main advantage is we see two big markets, the two biggest in crypto, and that's Northern America and in Asia. I guess the disadvantage is we're kind of asleep when the Northern American market opens. But we can be there during most of the day traded, most of the day when the trade action happens in America, the Americas, and then we are there when the Asian markets open, and so we are able to see there's kind of a quiet in terms of the trade between those time zones, the transition from the US market to the Asian markets, but they can both be very active, and so we kind of get to see both when we're mostly awake.
Thanks. And just to confirm again, sell stop order is not available in NZD, but it is available for crypto to crypto, including stable coins.
Yeah, and euro.
And euro. Yeah. Perfect. And last question is not a financial advice, but any quick tips for good trading habits?
Well, there's lots. I guess the biggest ones is don't. Well, at least for me is, and I guess this might be considered financial advice, but I think this is really a life lesson: is don't trade with crypto with money you can't afford to lose. We've had customers trade money with, that they get loans from credit cards, or they're mortgaging their house to trade crypto, and the worst part is they're doing it at the worst time of the market. They're doing it most when the market's bullish, at its peak, and that it's always heartbreaking to see, because you can't afford to do that, and people are attempting to do that. So don't trade money you can't afford to lose. Have a strategy before you place the order, and focus on your losses maybe more so than your gains.
That's fair. And sorry, we have one last question before we go. Are customers able to open a euro account with Dasset, and if so, how can they go about it?
So customers can buy euro, trade euro, and hold it in their account. At the moment, it depends. If they're transferring more than 50,000 euro, then we may be able to have a facility to receive. So that would require a support request. But at the moment, we don't allow individuals to really withdraw or deposit directly from their account. But you do have euro within your account already that you can buy, sell, or trade against. And so you can hold euro in your Dasset account and trade it against dollars or Bitcoin at the moment.
Cool. And for those who are actually interested and want to know more, please contact our support team, which is support@dassetx.com, and we'll be able, and our awesome team will be able to help you. And thank you so much for that, Stephen. Well, that's all we have for you today. Thank you for joining us on your lunch break to talk about Crypto Journey. We do appreciate you tuning in and hope you learned a little bit more about crypto and how to be a trader. If you're interested in any topic you'd like for us to cover in one of these sessions, please don't hesitate to contact us and let us know. And before we sign off, I'd like to remind everyone that Crypto Journey event will be held every Thursday at 12:30 during lunch hour, so don't forget to tune in. Any last words, Stephen?
No, thanks so much. And I look forward to talking to you soon.